Hey everyone, good afternoon. Back again for another edition of That's Our Two Satoshis Live. I'm Jeff Dorman, Chief Investment Officer at ARCA. And as we always do, we are talking about the digital asset markets, what's been going on over the last week, and what we're looking at. Quick disclaimer as always, none of this is investment advice. And obviously, anybody who has been following along for the last 6 years as we've been writing and speaking about digital assets, you can go to our website, ar.ca/blog, and read the blog yourself. Which comes out every Monday. So what's been going on in the markets? Stop me if you heard this one before, but equities reached another all-time high. Treasury yields fell, yet crypto got hammered. We're actually looking at the largest negative correlation between equities and crypto in at least 2 years. The NASDAQ and Bitcoin, just as an example, have a negative 80% correlation right now. Now, that doesn't mean that crypto and stocks are negatively correlated. As we've said many times in the past, this is actually a very uncorrelated asset class, and any period of high correlation, either positive or negative, are really just anomalies. Even 2022, when the entire world was very heavily correlated, again, that was just a small period of time relative to the history of digital assets. So very uncorrelated asset. But right now, clearly crypto going in one direction while equities continue to go the other. And the reason for that is momentum traders have always dominated digital assets. When it rains, it pours. Usually, whether we're going up really fast or where we're going down really fast, there's all types of funds and traders out there that are looking at the same indicators and are piling on in whichever direction we're going. So when it's been going down like it has been for the last 6 weeks, it really doesn't stop until sentiment starts to hit rock bottom. And sellers run out of ammo. So, to start with, sentiment is starting to hit rock bottom. We tend to look at a couple different indicators, one of them being the crypto fear and greed index. That hit 25 yesterday, the lowest reading in 18 months. So definitely we saw a big sentiment shift in terms of this overwhelming negativity being driven by the price action. As far as whether or not sellers are running out of ammo, I mean, that's a little bit different. We've been here before. Shout out to Alex Thorne at Galaxy Digital. He put out a really nice piece talking about how large drawdowns of this magnitude during bull runs are actually remarkably frequent. Bitcoin now being down 25% from the all-time highs earlier this year, and ETH down 30% from its March high. So this is pretty normal. But what's interesting to us right now is that this actually looks a lot like 2021. And frequent readers of our blog know that in December of last year, we actually put out a piece that talked about how 2023 looked remarkably similar to the end of 2019, early 2020, which is when Bitcoin first broke out to the upside. Took a while for the rest of the market to catch up, but then eventually the rest of the market caught up. And it left us wondering, well, is 2024 then going to look similar to the end of 20 and early 2021? Well, 6 months into the year now, it actually does look quite a bit like that. From January 2021 to April 2021, basically the digital asset market went straight up, which is very similar to what we saw in the first 3 months of this year, from January to March of 2024. At the end of April 2021, you sort of saw a last gasp. You saw meme coins starting to outperform everything else, maybe some legacy tokens like Bitcoin Cash and Litecoin. Typically a good sign that the market rally is starting to get to an end when you start to see the lower quality stuff rally. Well, same thing happened in March of this year. We had meme coins dominating the market as the rest of the market stalled. Well, what happened after that? Well, in May and June of 2021, the Bloomberg Galaxy Crypto Index fell 21% in May 21 and fell another 14% in June of 21. And then in the first 10 days of July 2021, it was down another 14%. So a huge sell-off after a pretty big rally. But then, remarkably, just completely reversed course midway through July. And actually, July 2021, even though it started the month down 14%, actually finished the month up 8%, followed by another big rise in August of a 30%. And then, I think you guys know where it went in October and November, another big, huge run before we finally petered out at the end of 2021. It actually looks pretty similar. The fear and greed index at the time looked pretty similar. You had a lot of momentum traders piling in at the end of that summer sell-off in 2021. So, we're constantly looking for market parallels, and this looks pretty similar right now. You have a lot of long-term tailwinds right now ahead of the market. The ETH ETF is going to be approved next week. You have an election heavily skewing towards crypto-friendly Republicans. We definitely have more softer economic data that's pointing to rate cuts happening, more imminently. You know, that's being offset by some short-term supply, which we talked about last week, which is Mt. Gox distributions happening, the U.S. and German government Bitcoin for sale, some VC unlocks and new issues. So basically, you have all this near-term, short-term supply pressures on Bitcoin, but you have all these long-term tailwinds ahead. And I started to think about like, well, how, what would somebody who's not on crypto Twitter all day long, or not listening to, our Twitter live, or not reading blogs every day, someone who's just like a normal investor, not really that into the crypto weeds. Imagine telling someone that back in May, the odds of an Ethereum ETF were basically zero. And then out of nowhere, you had this miraculous about face in the US regulatory framework. And you have the odds skyrocketing from zero to basically 90%, and now obviously 100% that the Ethereum ETF was going to happen. And yet ETH is now trading almost 10% below where it was trading before that news came about a month and a half ago. So, I would venture to guess that someone who knew nothing about Ethereum or crypto would probably find that somewhat confusing and might be like, well, that's weird, right? That's a pretty positive event. Why is the market lower from there? So, the market is the market. Obviously, right now it's telling you that the bulls are wrong, but history would suggest that they may still be right and that this is just a market pause. Another reason I think that that's probably more true than not is if you look at the big sell-off that happened on the 4th of July, which was on Thursday last week, it was a real bloodbath in crypto, largely because obviously in Germany they don't celebrate 4th of July, and German government Bitcoin was on the move that day. Sent the entire crypto market down more than 10%. But on Friday, when the equity markets opened in the US, Coinbase was unchanged. Bitcoin mining stocks were unchanged to slightly higher. MicroStrategy barely moved. So you had this weird divergence where Bitcoin's poor price performance didn't at all budge the equity investment. In fact, even Ethereum Grayscale Trust, the ETH, was higher despite the bloodbath in ETH. So if you think about this divergence that we're seeing, like, what does it mean, right? We talked about Bitcoin versus the Bitcoin mining stocks, for example. A lot of that is because of the AI data center conversions and a higher floor on what these Bitcoin miners are worth, independent of the price of Bitcoin. But a lot of it is also just there's still a big cohort of investors who are only investing in crypto via some of the crypto proxies, like your Coinbase stock, your MicroStrategy, your Grayscale products, and even these Bitcoin miners. And equity investors, because equity sentiment is so high, because equities are at all-time highs, and because most of these people who don't follow crypto every minute of every day are just saying, oh, Ethereum ETF is coming, it's a good way to get long exposure, they're pretty bullish crypto, and they're bidding the products that they have access to, which is, these crypto stocks and these proxies for the crypto market. Whereas those that are heavily into digital assets are just reading sentiment indicators and looking at the price action of these tokens, seeing these VC unlocks and a lot of the supply pressure. So you're really seeing a dichotomy right now, not just in the assets themselves, but in the type of investors who are investing. These longer-term TradFi investors and RIAs who are more longer-term investors in nature and less focused on the day-to-day digital assets are bidding hand over fist. Whereas the crypto traders and the momentum junkies and the degens are selling because of these wallet movements and these near-term supply pressures. And as we mentioned last week, you can see it in the skew. If you look at Bitcoin and ETH options, shout out to Velo data. If you look at the skew, 1 week skew is very negative, meaning puts are more expensive than calls because everybody is looking to find a way to sell this short-term supply. But if you look at 3 and 6 months out, calls are more expensive than puts because people are most bullish. Most people are still bullish when you look on a longer time horizon. So I think that's all pretty indicative of the fact that this is a pretty oversold market. As always, whenever there's short-term supply concerns, more people sell than there actually are coins for sale. And I think there's enough read-throughs here to make that parallel pretty safely to the summer of 2021. So we'll see what happens from here on out. But we definitely feel pretty constructive on what we're seeing in the market relative to the price action. So again, as always, we'll come back next week and see what we got right, what we got wrong, what we're seeing. But for those who want to get a little deeper dive or see some of the graphs or some of the supporting documents, again, I encourage you to go to the blog, ar.ca/blog, and we will see what happens next week. Presumably the Ethereum ETF will be live, and we'll start looking at those fund flows as well. So that's it for this week, everyone. Appreciate your time. Talk to you soon.